Good afternoon, everyone. Welcome to the Daily Recap. I'm Laz. Doing it a little different today. Usually I'm at the podium. Today I'm at my trading desk. But we want to really talk about, the week that was last week, the first week of January, and now we're into the second week of the new year, first full week of trading. So it's time to do some of, let's evaluate, like I said, what was and what is and what could be. Essentially, how a trader thinks. So let's pop over here. Let's jump into my charts for a second, and I want to start with the S&P as we'll look at the spiders here, SPY, and we started off the year with a bang. The fiscal cliff issue was resolved. We had just a tremendous gap in price here in the market. You can see last week's gap. We really haven't made any headway since the gap. You can see I just draw some lines here. We opened up the week, or we opened up the year, right around here, and we're just, a few pennies above that level. So not much progress, although we haven't seen any selling, which is, positive for the bulls. I still think you got to be very, very careful about, what essentially is a broken trend line that has been back tested, even though it is back testing at a higher level. And this trade, to me, represents a situation that really can go either way. And when I say that, I mean there's an argument to be made that, the more you consolidate up in this area, potentially, the more we will see some more upside there. But there's also an argument to be made that there's, a big, giant, hole in price. Essentially, the market hasn't really traded at this level. You can see sort of in between here. And there's opportunity to maybe pull back, and this market has been very, very turbulent. You can see that although we've had a nice pop in price, every time we seem to make a new high, a pullback then ensues. Made a new high, pulls back, make a new high, pulls back, make a new high, pulls back, make a new high. So I would say right now the tape to me seems like it's best suited for some of the shorter term traders, and I think if a couple more days of consolidation at these areas, at these levels, then we can make an argument that you can put some money to work on the long side. Now this is the general index, and obviously stocks sort of have right now have their own sort of agenda. You can look at a vast array of different sectors, and you can probably find some quality long situations, bullish situations, and you can look and find some quality bearish situations. So it is a very much a opportunity right now, in my opinion, is very suited to where your eyeballs are. If you look at banks have had a nice breakout. Here's Goldman. You can see breaking out early in the year and taking a little bit of a pause today after a big big pop on Friday. I'd give this trade some time to settle in. You don't want to be chasing price. JP Morgan as well. Here's JP Morgan. Just to kind of get a sense of the banks. The banks have been holding this market up better than I think any sector out there. Here's Bank of America. Not fast money. Here's Citigroup. Not fast money, but definitely very much in the forefront of everybody's radar, and certainly being watched very closely. Then on the other side, you have gold. Gold's been a staple for many people for a long time, and gold is now beginning to develop into a trending type of trade to the downside. There's been a lot of selling here and hasn't really performed very, very well over the last couple of months. And I think if you go up a time frame, if you look at a weekly, and I know Scott and I have talked about this chart in prior recaps and morning calls. The real level here is I think the GLDs will make a play for the support around 150. It seems to me like it's just a question of time before these break down again and we see a trade back to 150, which really is to me the line in the sand for potentially a much larger move lower. So keep an eye on the GLDs over the next couple of weeks to see how they perform. But like I said, there's inflow and then there's outflow, and this to me looks a little bit like there's some outflow here, but tradable opportunity nevertheless if that suits your risk tolerances. A couple other stocks. Apple. I'd say Apple at this point is really just a short-term scalper's trade. There's really not much commitment here. You have definitive levels of support around 500, and in the shorter term, I'd say around 550, 560. We've seen the seller step in. So we're very much in the midst of a range. And I think that, it needs to be traded accordingly. I wouldn't look for Apple at this point until it really gets either out of this range to the upside or the downside, with some volume for lower prices or higher prices. If you're going to look at this trade at this time, I think you got to look at it with a much smaller time frame in terms of, intraday opportunities, 1 to 2 day trades max, until, like I said, something changes here. And the chart begins to tell us that something is, something larger is evolving. Right now, it's very much in a range, and if you look at the weekly, right, just to get a more clarity here, and take away these lines, we haven't really gone anywhere. Apple hasn't made any progress. We've seen some spike hires, spike high, into 550, but even last week that tailed down pretty substantially. So a lot of consolidation here at these lower levels. We're now in week 4 or 5 of this, consolidation. Again, I'm just giving you a different look. It's the same chart as the daily, just, again, less data points. So I think at this point, if you're an Apple trader, you've been looking to trade Apple, manage your expectations in terms of upside or downside here, and look for shorter cash flow type trades until something, ultimately changes. A couple other trades on the board that I think are worth noting or notable. Amazon today, coming in with an upgrade. Amazon's been a very strong performer. Making new, fresh 52-week highs here in Amazon, gapping up out of into new highs, and just seeing really buying from the open. And as we look intraday, you can see most of the gains coming in the first 30 minutes here, right off the open, and then sort of languishing a little bit, but closing relatively strong, closing into the higher end of the range. And at this point, I'd say if you're going to look to Amazon, work off of some shorter time frames. Here's a lower pivot. If you're going to stay on the long side, I would stay long above 266. Should we lose that 266, then it presents itself for some sort of larger pullback, and even possibly to fill today's open gap. So, if you're going to trade this market right now, make sure you're not chasing upside. You're looking to buy quality pullbacks, or you're looking to buy breakouts out of consolidation patterns, like an EQIX. Again, not something on everybody's radar, but notice, a breakout after a 3-day consolidation. Those are the type of trades to me that in this market make a whole lot of sense. And, chasing longs and chasing shorts are not really paying very, very many traders. Like I said, there are definitely a lot of strong stocks in this tape right now, certainly led by the banks and some of the underlying indexes. Facebook, another one that, has been a very good performer. And the weekly, I think, tells the story. Here's Facebook. We got this nice, 3-4 week pullback here in Facebook, and right out the gates, back to, making new highs. I do think it's going to run into some resistance in this zone. Again, not a definitive price, but this is really the last substantial, pivot point in Facebook. You can see up here around 33.50 before that sell-off to sub 20 ensued. So it looks like we're going to push back there into that area on the daily. This is sort of what it looks like on a smaller time frame. So I like the long, but again, the closer we get into this area, the less I like it in terms of where is risk the least. And as it pushes in here, make sure you're prepared and you understand that it's into a pretty substantial area of resistance. So Facebook still working for some in the short term, but again approaching a pretty substantial area again where it could find some sellers. Whole Foods, an interesting looking trade. Whole Foods on the other side of that equation, a multi-week basing pattern here. You can see from November all the way into January, and again big bar down today on big volume. And you look at the weekly again just for clarity. The weekly looks pretty weak. And it looks like if Whole Foods can push through this these pivot lows around 87, 80, 87, 86, there could be a trade there for some, for those that are looking for that type of thing down into the lower 80 area, as this weekly seems to have some price decay happening. Not many buyers stepping in here. So again, trades on both sides of this tape. I think that's really the best way to look at this. It is a I don't want to say an individual stock trader's market, but again, there's pockets of strength and pockets of weakness, and it's not just about whether we go up or whether we go down. There's stories to be told all over the place, especially in again open up your horizons in terms of what you're looking at. If you're looking for long only, then there's lots of opportunity. You should be looking at banks, and you should be looking at a select few companies, that have had really, really good, good bullish consolidations. eBay, the credit card stocks, Visa, MasterCard have done nothing but, every pullback has been buyable. So there's lots of trades out there for the bulls. There's definitely a lot of trades out there for those that are looking for some short sell setups. As far as the broader markets itself, outside of the big gap up, it's been a very, very difficult, trade. Haven't really seen the market really give way to anything substantial other than that, last week's grind up. But, we start this week off, we undercut Friday's low. We'll see if that, leads to a little bit of a pullback. But I would keep an eye here on some of the shorter term levels, and they could provide opportunity for both traders in the near term. Like I said, I think it's right now a day traders, short-term traders market until the bigger picture really sets up, and maybe we have a little bit longer of a consolidation period where you might see some fresh money put to work. So keep an eye. VTF, great place to be right now. There were great trades today. I saw a couple of trades in Kihu, QIHU, and an Apple trade this morning, and select few day trades I think are working very, very well. So again, I think you got to go into a gear, not be in fifth gear here, not be committed to a long side or committed to the short side. Be committed to finding good quality trades for the shorter term, and I think you're going to navigate this market just fine. As always, a plan trader is a profitable trader, and I'll be back tomorrow morning with the morning call. Have a great day, everybody.
Hi, I'm Sean Hendelman of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.